HUD has had an incredible year in 2012. It was a record year for the 232 lending program for skilled nursing and assisted living. And Len Lucas of Love Funding has been working on HUD loans for quite a while, is very experienced with it. And Len, you do a lot of FHA lending, obviously. If a buyer is buying a turnaround property, how long should they wait to refinance it if they're going with HUD? Or should they take it to HUD right away and do the substantial rehab type loan?
Well, that's, I don't know where you're getting your questions. That's a good question. And the answer to that question is not an easy one. It depends upon what the borrower is most sensitive to, rate versus leverage. Because today rates are low, and to go direct to HUD would get you a low rate. However, it's at a cost of leverage, and the situation is such that the HUD acquisition refinance 223F program is not a forward-looking program, and to take advantage of that program on a turnaround, you want to wait until your property stabilizes. So you're going to spend a period of time while you get it stabilized, and you want to get to that T12 number, because T12 is the financial number that HUD keys in on. So you're going to spend time getting to the T12.
What's T12?
The trailing 12.
Trailing 12.
We look at your trailing 12 income expense, and we start from there in determining what the value is of the property, so that we can go down to the loan size. So you have to wait in that sense to get there, and then you face the crossroads of, I've increased the value of my property. Okay, do I want to go right to HUD today and only finance the existing debt, which may be a lower leverage because of the value that you put on the property since you bought it, or do I want to take some of that cash out? And if you choose that you want to take some cash out from the value you've created, HUD's not going to do that. So you need to go to a non-HUD lender, do your cash out refinance, then wait another 2 years before you go back to HUD.
Yeah. So that's quite a bit of time. You've got all the rehab, the
Right.
seasoning, the rehab, the refill up, this 2-year seasoning, and then come back to HUD. So
Right. So it depends what you're most sensitive to,
Right.
and where you are in terms of leverage today, and where you think you're going to be with leverage tomorrow.
skilled nursing prices just in the overall market have been higher. We had a record average price in 2010. 2012, we almost matched that, but just in general, prices are higher than 10 years ago. With that kind of lifting up of prices, is the average size of HUD loans getting bigger, or is it staying the same, or just no one really tracks that?
Well, it's not something that I track on a consistent basis. I mean, I can say that if you look just in the last couple of years, they've stayed about the same, and that would be by looking at the HUD volume and just measuring the volume by dividing the volume by the number of transactions. You have it comes out around $8 million a transaction. I have to assume, though, that loans have gotten bigger because values have gone up, and our loans are based upon a percentage of value.
I would think that, but it's but who knows? There's been a lot of bridge to HUD financing of late. Isn't that? I always look at that and I say, well, okay, you're doing the bridge to HUD. Why are borrowers so confident they're going to 2 years later qualify for HUD financing, not even taking into account the interest rate risk?
Well, you have to. There are 3 types of bridge loans. Okay, there's a bridge loan that people need on an acquisition, because generally a seller doesn't want to wait for HUD and everything that goes with HUD to get their money. So sometimes people get a bridge loan just for timing purposes, and they close. While they're closing on the bridge loan, they're also going down the road the HUD loan to take the bridge out. In that situation, very little risk. The lenders all can see what the history of the property is, and there's going to be a very short period of time between when the closing occurs and when you take it out. The next situation when people would go for a bridge loan would be a cash out. Now, if you have a cash out, and that cash out requires the 2-year seasoning before you go to HUD, if it's a stabilized property, then there's more risk than the acquisition, but still not a whole lot of risk, because you have a history of the property's performance, and you're assuming that performance will continue. You do have risk that rates will go up in that 2-year period. Although rates are not the big, debt service is not a big issue these days. We do that calculation because it's in the computer, but it's not a limiting factor on loans. So you're taking some operational risk and some reimbursement risk. Not that big a deal. Where you really do see the risk, and where your bridge lender, more than your borrower, has to be concerned, is in that turnaround situation. Because in that turnaround situation, you're not only looking at risk of interest rates going up, but are they going to be able to turn the property around, and are they going to be able to turn the property around quick enough to be able to get to that trailing 12 number that HUD likes to see when determining the value.
Right.
So,
And when you're underwriting a property, is there one major thing about a property that can worry a lender the most? Some risky aspect. I mean, 20 years ago it was underground oil tanks. That could be the kiss of death. But is there anything that?
well, physical, in terms of physical plant,
Right.
it's the unknown unknowns that you worry about. I mean, there are problems with septic systems. There are nursing homes, believe it or not, they're on septic systems. That gives people the willies in terms of how long, what's the length of time that the system is going to
Before it explodes.
right, and is there land available for a replacement system? Environmental issues. I mean, HUD is tough on environmental issues, and even if they're off-site and there's a potential, we're dealing with a situation right now where there was an off-site spill that has the potential to come down gradient, that can cause some concerns. So, environmental is a concern. The other, inside the building, you also run into concerns, especially with older properties, as to what is the remaining useful life of the facility, because HUD's, although their maximum loan term is 35 years, that's based upon 75% of remaining useful life. So if you get to an older building, you may find that useful life being cut short, and you may end up with a 25-year amortization or 30. And also, another problem we try to deal with, take your Alzheimer's care. This is a good time that you run into conflicts with HUD on a physical structure standpoint. You can have a brand new, purpose-built Alzheimer's care facility, and it will not have one full bathroom suite, toilet, sink, shower for every 4 residents, because in fact they don't want the residents showering by themselves. This isn't a hotel, and that's a problem. That's a problem. HUD's gotten a little bit better in terms of thinking about bathroom waivers, but you have to be ready to build those extra showers and put them someplace if the issue comes up.
It isn't all used. How about with the borrower itself? Is there any thing about the borrower that can stick out as a risk factor?
Well, when you start to talk about the borrowers, clinical performance is the issue that you really need to bear down on. No special focus. Okay, that's the first. You want to make sure that you don't have any focus problems. You want to make sure that you don't have high claims on your policies. HUD is going to look at all of the facilities that are on the policy of the property that you're bringing to HUD. So claims become an issue, surveys become an issue. HUD has become much more aware in recent times, or sensitive to the fact that these are operating businesses, and they want to know that people know what they're doing. So the clinical side of it really comes into play.
And you've been doing this for well over a decade. Are there borrowers today that are coming through to you? Are they any different today than 5 and 10 years ago? Are they better? Are they more sophisticated?
The prototypical HUD borrower of years ago was more of the onesie twosie type of guy. Today, fueled by the fact that since the economic crisis, there are fewer competitors out there, non-HUD sources of funds, and the fact that interest rates are at historically low levels, have brought everybody into the fold. So you see everybody from a smaller onesie twosie right up to big chains coming into HUD trying to lock in the long-term financing.
Especially some big chains owned by private equity firms that want to lock that in.
Yes, it's very, very attractive. I mean, if you can end up with a just to pick a number, a 3% up or down, plus or minus interest rate for 35 years, it takes a lot of worry off the table.
But with interest rates so low right now, and especially with HUD in the long end, I would hope everyone is thinking about longer term maturities. But is maturity really a big factor for your clients? Are they looking at the maturity, or are they looking at the rate?
That's a good question. It's rate. But it followed closely. You're almost splitting a hair there, because it's the rate and the fact that that regardless of what happens in terms of reimbursement, that this is what my debt service is going to be for 35 years. Then it's up to me. I mean, you can always prepay it. I mean, the HUD loans are prepayable. Almost always prepayable without penalty after year 10, but you have options, and that's the security that people are looking for today.
Right.
And that is the driving rate. Is the
if you can get 2.5% to 3%, you don't have to worry too much about your capital structure.
That's right.
For a long time. How's your 2013 pipeline looking?
It looks pretty good.
Yeah.
It looks pretty good. Both for myself personally, for Love, and I know for all of my competitors, HUD business is up. I mean, it's from 2010 to 2012, it doubled. Mm-hmm. It doubled, and we'll see a big increase this year as well.
Oh, really? On top, because 2012 was a record year not only for HUD, but for most of the HUD vendors. You think 2013?
I suspect that this will be a bigger year. The interest rates, again, people are driven by interest rates. Interest rates probably bottomed out, and I don't have the graph, in the fall. Mm-hmm. And when people saw that number go down, I mean, that just brought even more and more people into the fold, so to speak. So,
well, good luck on 2013, and any comments on the debt markets in general or outside of HUD?
I'd have to defer. I read the Senior Care Investor quite a bit.
Oh, okay.
And I'm sure that they have some very cogent thoughts on it.
Okay. Well,
thank you.
All right. Thanks. All right. Good sitting down with you. Good luck this year.
Thank you very much.